And if people are thinking about going into partnership with, their friends or other business partners or things like that, do you see dangers there when people are setting up to just make sure the structure is just right for that?
It's really about getting it right while you're all speaking, because I hate to be a cynic, but there will be times when you don't like each other very much. So probably the biggest trap that I see is the higher rate tax threshold at 50,000.
Mm-hmm.
People know that they're going to pay more tax once they hit that level, but they sometimes either forget or are ignorant to the fact that you also lose your child benefit at that stage. So if you're going to lose your child benefit, let's do it properly.
Welcome to the Business Sense podcast. I'm Gary Crosby. This is the podcast where we make sense of the business journey by talking to owners about what they've learned along the way. Let's jump into today's episode. Toni, it's great to see you. Thanks for joining me on the Business Sense podcast this morning.
You're very welcome. Good morning.
Yeah, I'm really keen to give the viewers some real insight into how they should manage their business financially. So we'll touch on all sorts of things. But just to start with more generally, what kind of challenges do you think businesses are facing in the financial sense at the minute?
A lot of small businesses have never had to deal with inflation like we've got at the moment. We've had quite a steady ship in terms of our economy, other than the obvious sort of changes with COVID and things like that. But in terms of financial change, we haven't seen this level of inflation for some time. And small businesses, whilst they're agile, they do quite often leave their pricing till the last minute. And so I'd say challenges are about value and about absorbing those overheads that are just going up and up and up.
And I'm not a big fan of businesses absorbing the overheads. They should be passing those prices on, do you think? But that seems quite difficult right now with the cost of living crisis and everything.
I guess it depends on which industry you're in, how price sensitive your customers are. But you're right, absorbing is the worst case scenario. To be able to increase your prices at least with inflation so that you can offset the effects of the increase in the cost of living, absolutely.
And I see some areas where inflation is way more than that sort of headline 10% that people have been talking about for the last 12 months or so. In one of my clients works in construction business, building materials.
Absolutely.
Going up by 35%, that sort of thing. Do you see that sort of thing in other industries?
Yeah, specifically anything to do with property other than basic investment because of the supply chain. So we had a sequence of events. We've had people returning to Europe after quite some time working in our labour force, then followed by Brexit, then COVID. And the supply chains from particularly China and the Middle East have really strangled the construction industry, and we're seeing some of the house builders actually stocking their sites, so almost creating plots like little warehouses on site and banking that stock when they can get it so that their labour force can stay active.
Wow.
And then on top of that, you've got the inflationary pressures of labour being stretched and people really struggling to make a margin on the construction side of things at the moment. That has seemed to have eased a bit in that our merchants, your Travis Perkins and Ridgeons, seem to be getting things back on track. But I think for the small builder, they are the ones that need to look at their margins and their pricing and be sensitive to the fact that a quote they did 6 months ago just isn't going to work now.
Yeah. And you mentioned COVID. One of the things I am noticing with my clients is there is still quite a long tail of bounce back finance and that sort of thing. Do you see that? That was very cheap money, wasn't it?
It still is cheap money.
Yeah.
And whilst they should pay it off if they no longer have a bounce back issue, it's very compelling argument to keep a bounce back loan going. And that just needs to be factored into the cash flow forecasting because a lot of those people wouldn't have had any kind of finance in their business before. So it's a new habit, if you like.
So let's just have a think about the business journey then. People who they get the entrepreneurial spark and they're thinking, right, I'm going to set my business up. One of the things that I've heard people struggling with is this concept of what kind of structure to set the business up as. What are the challenges there? What are the traps for people to fall into there?
Well, I think the challenge is that things keep changing. Our government doesn't like to keep still, and certainly doesn't really believe in simplification. So we just need to get relevant, up-to-date advice. And if we turn the clock back a decade, then it was fairly straightforward. Because of the NIC savings on dividends, operating through a company was almost a no-brainer. It overridden any other strategic elements. The tax was worth saving. Nowadays, we have a dividend tax. So whether we draw our income out as salary or as dividend or as profit if we're in a sole trader situation, the tax regime, the margins are very similar now. So you're not saving lots of tax. Therefore, you need to look at other reasons why you would choose a structure. So limited company, I think more and more emphasis is putting on the word limited rather than on the savings that can be gained from it, because they are more marginal.
As in a limited liability and a separate legal entity.
Exactly that. So if you're in a high risk industry, or you might have cash flow pinch points, things that might some suppliers and that will only work with limited companies. So you may not have a choice. But if it was just down to your personal decision, limited companies aren't as attractive as they used to be. And we do see more and more people just sticking with the sole trader route. Or if they are more in the stages of being a corporate entity, they will go for a limited liability partnership, which has the same principles of limited liability, but with the partnership tax structure. So it's a sort of hybrid, if you like.
And if people are thinking about going into partnership with, their friends or other business partners or things like that, obviously they're going to need a solicitor as well. Do you see dangers there when people are setting up to just make sure the structure is just right for that?
It's really about getting it right while you're all speaking, because I hate to be a cynic, but there will be times when you don't like each other very much. Quite often I'll speak to new partnerships, people that have gone into business together with really excited and ambitious aims, but they do need to accept that 10, 15 years down the line, life will look different, and they need to protect that. So if you're a limited company, then a shareholders agreement, unless everybody is immediate family, then perhaps that's not worth the cost of. You could perhaps do that yourself, just informally. But if you've got anyone outside of your immediate family having shares, then please get a shareholders agreement with a lawyer. And if you're going down the partnership route, then a similar document is called a partnership agreement. And that will just help ease the situation if things get a bit tense.
And then once you've got your company structure sorted out, you're going to start thinking about how to manage your finances well. And one of the things that I often hear from my clients is being slightly surprised when they get a corporation tax bill or a VAT bill. So when they're setting up that initial thing, then they're thinking about the bank accounts and they're thinking about the digital software. What should they be looking out for there?
Well, the whole point of digital software is to keep you up to date with information. So you shouldn't be surprised by very much. The whole point is to eliminate surprises as much as possible. So where something like a tax bill comes into play, that it is either twice a year or perhaps once a year for corporation tax, is really just to get into those habits of squirreling a little bit away each month, making it part of your cash flow strategy to include that sort of nest egg away, so that when HMRC come knocking, the money is there for you. And really that's just about good habits, good housekeeping really from a financial perspective. And as I say, if you're keeping your books and records digitally, then the information is there for you. You just need to be taught how to find it.
I often think that we should be thinking of ourselves as unofficial, unpaid tax collectors.
Oh, absolutely.
So when the revenue comes in, I'm taking 15 to 20% off and sticking it into the VAT account, and taking a little bit more off and sticking it into the corporation tax account. Those are good habits to get into from the beginning. Yeah,
absolutely. Even more so with VAT, you are just a tax collector. People who run businesses need to get it into their mindset that 20% that they put on their bills is not their money. That is there, that they're collecting to hand over to the taxman. Corporation tax, that is a tax on earnings, and so that's just one of life's little joys.
To sort that out. And making tax digital, there's been a lot of noise about that in the last couple of years. I don't actually know when the deadline is. It may have already passed.
It did, but it got pushed forward another 2 years. So,
Okay.
so it's not on our horizon just yet.
Okay.
And the cynics would say that it's a bit further ahead than that.
Okay.
So we've got a little bit of time yet, but we're finding more and more businesses, particularly new businesses, set up in a way that would be MTD compliant from the start. More and more people are embracing the digital accounting that is required of MTD. So again, eliminating surprises. Try not to allow MTD to worry you, because it is just about routines.
And when we talk about compliance and we think about software like Xero and QuickBooks and Sage and things like that, if you're running your business well through that and you've got a good bookkeeper who's keeping everything up to date, is that it, or is there something more with MTD that's going to catch people out?
No, the MTD regime just means that you're going to be clicking that submit button a little bit more regularly. So if everything's in good order, it shouldn't change much. I guess the biggest change is there's more opportunity for them to penalise you if you miss a deadline.
Yeah.
Because there'll be more of them.
Yes.
So yeah, we need to be on the case, but the software gives you warnings, and obviously we can diarise those deadlines as well. So it shouldn't be an issue if we're organised.
Yeah. A thought popped into my head, because I had a smart meter fitted at home yesterday. It's a kind of a smart meter for the business, isn't it? With all that data flowing straight to HMRC, to keep the financial information up to date.
Yeah, absolutely. It's like an API. It flows traffic backwards and forwards on a more regular basis. Yes.
And then it's often a challenge for small businesses, first of all, to generate enough revenue so that they can pay themselves. And I guess there's lots of different ways to pay yourself if you're the director of a company. If we just focus on limited companies for now, how should limited company directors be paying themselves to be tax efficient?
Well, it's not my place as an accountant to tell you how to run your business and be paid, but the most tax efficient approach generally, obviously different circumstances require advice, but in the general round, to pay a salary up to the personal allowance, which is give or take 12,500 at the moment, to utilise that personal allowance to not encroach on the national insurance band at that point, is the best approach. And then any other money that you want to take, you would take as dividend. But the caveat to that is there are other ways to pay yourself, so pension contributions, company cars, medical benefits, etc. So you do need to talk to somebody. But the basic principle is about £1,000 a month in salary, and the rest is dividend.
Okay, yeah, that's good advice. And all of this kind of structural setup, the digital accounting setup, the way you pay yourself, things like that, I imagine there is a couple of traps for the unwary. What should we be watching out for as small business owners?
So probably the biggest trap that I see is the high rate tax threshold at 50,000. People know that they're going to pay more tax once they hit that level, but they sometimes either forget or are ignorant to the fact that you also lose your child benefit at that stage. So if you earn 50,000 exactly, you're fine, but £50,001, and they will start collecting back the child benefit. And if you've got a large family, that is a massive, I know it is called child benefit clawback, but it's still a tax really, isn't it? It's a levy. Yeah. So that needs to be factored in. So generally speaking, we look at strategies to make sure that everybody in the company is earning that £50,000 optimum level. And if you can't avoid going over that because your lifestyle dictates that you need more, then let's be really ambitious and go up to the next threshold, which is 100,000.
Right.
So if you're going to lose your child benefit, let's do it properly.
Let's lose it in style.
Absolutely.
Yeah. With a Ferrari parked outside.
No, I wasn't quite thinking that ambitious, but yes.
Yeah. And I'm thinking now about, when people set up small businesses, very often they're the technician in the business, so they do what the business does. They're a web designer,
they are the business,
or a videographer, or something like that. They are the business themselves, and sometimes it's tough for them to start thinking about how to budget correctly or how to forecast correctly. For your clients, what kind of advice do you give them to get them into that way of thinking?
I think the first thing to do is to work out what you want from your business, what is enough for you, but also what you can survive on in terms of earnings, and then make a plan for something in the middle there, a progressive plan towards your ambitions. And that's where a coach can come in. That's where accountants can support you with cash flow forecasting, with building the business and scaling the business. But also it might be worth at that point introducing some HR advice, because if you're really going to scale the business and make it more than just a job creation exercise, then you need to start looking at subcontracting or employing staff. So it's a bigger picture, but really it's a business plan. What does your business plan say? Where's that going? And does it actually satisfy your ambitions and why you went into business in the first place?
And when you're advising people on, creating forecasts for their business, is there a method that you prefer? Is there a way of looking at it that you find has been successful?
It really does depend on whether the business has got any financial history, because we can usually take some trends from that. We also need to look at what sort of working capital the business needs and that sort of thing, whether we need to build in finance. There's lots of aspects to it, but again, it's about business planning and making sure that the business is actually doing what it intended rather than just keep you busy.
And there is a role for budgeting and forecasting in a way to again, eliminate surprises, right?
Absolutely. Accountants don't like surprises, and generally speaking, our clients don't either. So if we can forecast something, it can be a little bit of a crystal ball exercise at times, but if we can use trends, we can use history, we can look at costing and margins to try and establish, if we sold another pound's worth of materials, what's the actual impact on our bottom line. And that's really where we're going. So then once we've established that, we can decide whether we increase volume, turnover, top end, or whether there are ways that we can make efficiencies within the margin to improve the bottom line. But the starting point is, where are we going? What is realistic? What kind of market exposure we got? How sensitive are our clients? There's lots of different factors.
And I'm also thinking about that idea that you've got to be able to measure those things, and I know the digital accounting packages do that. How important is it to, just at the basic level, to know your numbers?
Oh, absolutely. I cringe every time I watch Dragon's Den and they're asked about margins, and they've either just learnt them verbatim in the hope that that'll get them through, or they haven't got a clue. But it is really important. It's a fundamental of business acumen to understand the basics, and we don't expect our clients to know every number in their accounts, but the fundamentals of turnover, gross profit, basic overheads, where your break-even point is, that sort of thing really is necessary, because without it you can't then go on and predict your cash flow. And if you can't predict your cash flow, then surprises become disasters.
Well, indeed. And I have met people in the past who, they run the business by looking at the bank balance.
Yes, it's still quite common.
Yeah.
Yeah, and now we've got internet banking. They can do it every single day or every minute of every day if they choose.
Yeah.
And people do become quite obsessive about it. And if you have the sort of business that doesn't have huge amounts of people owing you money, lots of stock and lots of other reasons so profit can be converted into cash very easily, then that's not a bad measure. It's a very simple one, but it's not a bad measure. But the reality is business isn't simple. And so we should get proper management information. And now we have that access to information through our mobile phones, through software like Xero.
Yeah. And what's the Toni Hunter method for getting people to do more than just check the bank balance and recognise the benefits? Okay,
so I do encourage adoption of some sort of cloud accounting, even for simpler businesses.
Yeah.
There are some clients that I don't, because a good spreadsheet or a good cash book is still better than a bad set of digital records. But generally speaking, people are quite good at embracing the software, and they're quite surprised at how simple it is to use.
Yep.
So I would get that information into the system, and then I would encourage them to run some basic reports at least once a month.
Yep.
And then speak to their accountant about those reports at least once a quarter, so that everybody's on the same page and the key points are being highlighted. Because the challenge with business is that we're all things to all men. We're pretty busy all of the time and don't lift our head above the parapet to look at that sort of information. And it's that working on your business rather than in it kind of mentality that's even if it's just a 20-minute chat with your accountant once a quarter, that's a moment to take that step back and really think about, is that what I expected? How's that panning out? Is that going to cause me any problems in the near future? That sort of thing. And it is just that take a step back moment. And so I do encourage that routine of regular input of data, either daily or weekly, reporting once a month, and then discussing the results at least once a quarter.
Yeah, I like the concept of, those software packages. They give you a set of levers, and you can look at the margins, and you can look at the overheads, and you can start to pull those levers and say, we need to maybe trim some costs, or we need to increase volume, as you said. So it's about what you do with the information. One of the things that, of course, any computer software program is guilty of is that if you put rubbish in, you'll get rubbish out. So what would your recommendation be around kind of bookkeeping and making sure those numbers are, very accurate and that software is up to date?
Okay, find yourself an accountant that actually is willing to train you and use the software properly. Or if it's really not your thing, admit so, and let's look at another solution like outsourcing that part of the process. One of the great things about cloud accounting, in my opinion, is that you can break down the different roles within it. So you don't need a bookkeeper that does everything, and then that bookkeeper goes on holiday and you've got nothing for a short while. You can split the responsibilities, and an accountant can dip in and out and support you. So if your bookkeeper's off poorly or something like that, because it's all in the cloud and it's all systemized, there's no reason why someone can't come in and pick up the pieces when it's needed. But going back to the original point, the roles can be split. So you can have some people that will just do invoicing or expenses, and then others that will look at the bank rec and the VAT return and that sort of thing. And so if clients aren't totally comfortable with that, or just don't have the time and inclination, I mean, at the end of the day, you didn't go into business to become a bookkeeper and learn a software. So if you don't have the inclination to it, there are plenty of people out there that are willing to take on that. And now we're in this virtual world. We're not really restricted in that respect. There's plenty of outsourcing options. And so that's what I would encourage, to do the bits that you're comfortable with, the bits that make sense to you, and outsource the rest.
That's good. That's good advice. I'm wondering whether or not the digital software, in a way, blurs the boundaries between bookkeepers and accountants. And
no, I actually think it strengthens it. Because bookkeepers are very detail orientated, and they know what their role is, and they're the ones that tend to set the boundaries and say, okay, I'll do it up to this point and then you take over. And I actually have got some really good relationships with bookkeepers now, so I don't just talk to my clients, I talk to my clients' bookkeepers. And that really works well, because then we've both got the best interest of the same client at heart. And they are getting the best value for money, because if I know that bookkeeper's capable of doing something more, I can encourage them to do so. So no, I think it's an opportunity for collaboration.
Great, yeah, that's good. And as businesses start to grow, then and they become a little bit more focused on them. Some of my clients certainly have started to get management accounts and things like that. Just talk me through the benefits of taking that kind of approach to business finance.
Well, the fact they're sharing it with you is a good starting point.
Yeah.
You can rely on that information to get that peer support you need. You can win the trust of your bank manager. You can now upload management information to various portals to seek funding. So there's lots of funding portals out there. So almost like Go Compare for insurance, you can now look for finance in the same way. You upload your management accounts and your financial statements, and you put in there some basic parameters. I would like to borrow this to buy that piece of machinery. And the funders that are willing to help you will come back to you, and you can then decide whether you want to initiate that conversation. So it's not just about the board and the decisions. It can go wider than that, and you'll get a lot better response from a bank manager if you've got clear information. But it might actually reveal that you don't need finance at all, that with a little bit of patience or a little bit of outsourcing or slight tweak to a margin, and you could release the cash that you need for whatever next step is. So it is about looking at more options because you know exactly where you are.
And when would you recommend, what size would a company have to become before management accounts made sense? I know that's a very general question.
Oh, you're asking an accountant. I would say from day one. Why not? Particularly if you're not investing cost in producing that information. In times gone by when you would have a bookkeeper who would then pass information to an accountant, so you're paying their time to produce management accounts, and then you need time invested in understanding them, etc. I could understand why people were reticent, but now that information is literally a couple of clicks away. Why not?
Why not? Yeah.
And really, it's about routines and eliminating surprises.
Yeah, setting some time aside to be working on the finances.
And it doesn't have to be a lot of time, but it needs to be regular and it needs to be structured. It needs to happen.
I think the thing that confuses my clients more than anything else is the fact that they're comfortable with the profit and loss, the idea of looking at that. The balance sheet always confuses people. How should a small business owner use the balance sheet?
Okay, so the biggest fundamental difference between the two is that a profit and loss spans a period of time. Most business owners get the concept of either a calendar year or an accounting year, or even perhaps a tax year.
Yes.
A balance sheet is a moment in time. So I explain it that you stop the world turning just for a moment, and then look at your business and say, what does it own and what does it owe? And the difference between the two is the shareholders' funds. And in most instances, the person I'm talking to is the shareholder.
Yes.
So that gives them that warm feeling that there is actually some money there that is developing. But it gives that initial, immediate snapshot as to how the business is faring in terms of liquidity. And what I mean by liquidity is how quickly can we convert those numbers on that piece of paper into cash. So if it's stock, it should be fairly liquid.
Yes.
If it's debtors, people who owe you money, well, we can get some debt collection systems working to get that money in. And obviously the panacea is cash in the bank. But we need to know that information. We need to know that it's solvent. But just as important is that's the page that goes to Companies House and will form your credit score for your company.
Yes.
So when other people are making sweeping judgments about whether you're good for the money, it is that page that they see. And so if we are looking at finance or we're looking at an exit strategy or anything like that, we need to be really careful that that balance sheet is managed, because as much as we can't tell a lot of information without the other financial statements alongside it, we can tell enough to make sweeping conclusions, and that's dangerous.
Yeah, and I think that's a brilliant explanation of the balance sheet, but it throws up the same point, which is that it gives you a set of levers that you can then react to and pull if you need to and move the business finances in the right direction. Yeah,
and for a lot of businesses, it's not all about being wholly liquid. If people have got a lot of cash in the bank because they like that safety, then that's not always a positive thing, because it means that they're not leveraging as much as they could, or they could be saving money elsewhere by negotiating with their customers and suppliers, and they could be looking at other ways of investing. They could be upgrading machinery. They're basically using that cash in a much more productive way than letting it sit in the bank and erode by inflation. So whilst we like liquidity, we don't want too much of it. And that's really where management accounting again can come in, and the likes of you and I can guide business owners in best use of that cash.
And I'm thinking that small businesses go through a journey. Some grow, some don't. Some reach a certain level and feel happy with it. Many go on to grow to a much larger level. Is there a point where it makes sense to have a finance director?
I think that really is about your time priorities. We also need to be mindful that finance directors are qualified people with lots of experience, so
Yeah.
they don't come cheap. And so there has to be an appropriate budget. But there also has to be enough interesting things within the business for that finance director to really feel that they are part of something. When it comes to bookkeeping and management accounting, that's very much a routine part of the business structure. An FD really wants to drive the business and help the other directors in making those decisions.
Yes.
And educating and building better margins. They want to see improvements or strategies in place. And so your business does need to be in a position to attract the right sort of FD. And so we find that smaller businesses, particularly sole trader type businesses, they need management information, they need peer support and guidance, but they probably don't need an FD.
So and that was the point that I was thinking about. There's probably a sense that a business has grown larger, but it's not large enough to have a full-time FD, but it's too large to do without somebody to give that kind of advice. How do we fill that gap in the middle there?
Part of outsourcing again. So it's that
Right.
same solution that we've got this digital technology. We don't all have to be stuck at the same desk every day anymore. And so emerging through the profession is the idea of a fractional FD, which just literally means an FD for a fraction of the time.
Right. Yeah.
And literally you could pay for an FD for an hour a week, a day a month, whatever your business needs. Or it could be more of an interim situation. So perhaps you're going through a financing round, or you want to attract some new investment or something of that nature. Or perhaps the owner is looking to exit in the next 2 or 3 years.
Yeah.
In that scenario, an interim or a fractional FD can come in and help steer the ship towards that strategic direction that you're looking for. And so you don't have to commit to employing someone. And you certainly don't have to commit to full time.
No. And your company is fairly new, is that right?
It is. This is week 6. Thank you.
Week number 6.
It is.
And I know that these are some of the services that you offer. Tell us a little bit about what you're going into the marketplace with.
So I am trying to provide FD services to smaller businesses so they can get all those benefits of peer support, collaboration, good quality information, training their bookkeepers to provide that information in a timely way, in an efficient way, looking at their overheads, all of those things that an FD would do, but on a very part-time, fractional basis. So giving small businesses the opportunity to benefit from an accountant, an FD, on a regular basis. And it's really quite interesting because the variety of people, the variety of businesses, but also the different needs of those. And there is an assumption that if people are successful in business, then they already know everything about finance, and that really is not the case. And so I enjoy teaching people who I already deem to be my peers about the fundamentals of their financial business and helping them to succeed even more. It's very satisfying.
And so is it just the fractional FD stuff, or are you doing much more for your clients than that?
No, I will still continue to provide the more traditional compliance accounting that you would expect of a chartered accountant, so the tax returns, the year-end accounts, etc.
Yep.
But I will be doing that in a virtual finance way. So again, my belief that we should outsource everything that we don't want to do, or that it doesn't make us make a good contribution to the business. So I have created a network of bookkeepers who are willing to do either small tasks within the business or the whole, just hand it over kind of approach. Whether they will do that either on site or through digital means. But either way, it will be a virtual service on the fact that they will see me through Zoom on a regular basis to interpret that information, and I will be responsible for those bookkeepers providing the appropriate quality. I've got myself a payroll bureau to outsource to, and we're just going to be looking at ways of doing things smarter and using the opportunity of the digital world.
And just thinking about the business, from a personal perspective, you're the qualified, the chartered accountant in the business. What's it like having to deal with everything else? The marketing and the
Well,
all that
I
sort of-
do love marketing.
Yeah.
I enjoy the interaction and the creativity of it.
Mm-hmm.
So yes, I'm enjoying the freedom to be a bit more creative at the moment.
Yeah.
But the pendulum does need to swing back towards clients and their needs, and that is starting to happen, thankfully. So yes, so I'm now experiencing all of those things that clients have been telling me about.
That's
So
why I asked.
yes, exactly.
Yeah.
I have a huge empathy now for those who have been through that startup struggle and should I be doing this? Have I done the right thing? Maybe I should go and get a job feeling. But we're going through it, and as I say, the pendulum is swinging,
Yeah.
and I'm really enjoying the interactions I've had and the responses I'm getting from business owners. And I believe that this is the way forward for the accounting profession, that we need to be more consultative. We need to provide our services on a more fractional basis, less about transactions and more about that communication and touch point with our clients.
One of the things the questions that I ask at the beginning of any coaching relationship as I'm trying to establish my own understanding of a business, and I'm very careful about how I phrase this, I say to my clients, do you have an excellent accountant? And when I ask that question, I very rarely get a yes. And I'm not casting aspersions on the entire accountancy profession, but I'm wondering why that is. And when I ask them that, they say, typically I only hear from the accountant a couple of times a year, and I want proactive. Does that exist? Is that possible to deliver proactive accountant services?
Absolutely, but you have to be in touch with your client on a regular basis. And the whole point of having routines of touching base with them at least quarterly, I prefer monthly, does give you that opportunity, because you go into those conversations with the small agenda of the things you want to raise.
Yeah.
But notoriously, they always divert into different conversations because things spring to mind or
Yeah.
questions that need to be asked. And really, the issue you have with people not saying that they have an excellent accountant is purely perception of value for money. Because a lot of the compliance work we do at year end is costly. If that's all you see from your accountant, then the benefits versus the cost aren't perceived in balance. But if you see your accountant on a regular basis, the year end becomes a process because there's no surprises anymore. We all know what the results are going to be. But mainly, the client feels they're getting that interaction and they're getting that proactivity.
Yeah.
Proactivity, I think, is a subjective term, a bit like excellent is
Yes.
subjective.
Yeah, very much so.
And some people will say, yeah, my accountant's a good old boy. I really enjoy his company. I like this about him.
Yes.
But they don't actually answer the question about whether they're a good accountant. And really, that is about relationships and trust. And just being a trusted advisor is the aim going forward. And I think accountants need to really focus on that.
It was a client who said to me, I'm doing my end of year accounts, so it's well beyond the actual end of the year that we're talking about,
Yes.
6, 8, 9 months, and my accountant picks up something that I'd done in month 1. So I'm now 18 months behind
Absolutely.
the drag curve, having done something wrong way in the past, and I think that's something that needs to be thought through a bit more.
Exactly, and had they had monthly reporting, there's a good chance that would have picked up.
Exactly that.
Now, if it was just a one-off, it's probably easy to fix. But the danger is that error has become a habit. And so we could be perpetuating that throughout. And as you say, we've done it 18 times now.
Yes, exactly.
Quite possibly. Or it could be just an innocent, I didn't understand that point, in which case we can educate. And I think clients are more keen these days on being educated than they are being told what's right and what's wrong.
And is there anything, just to finish off, anything that you can see technology-wise that's going to come up and change things? We've heard a lot about AI, we've heard a lot about digital accounting and all that sort of stuff. Can you see the accounting profession changing in any way as a result of some of this technology?
It already is.
Yeah.
I think is the answer. So a sign of that is we have to change the way we train the apprentices within our profession.
Yeah.
So unfortunately, when I was training, everything was done manually. And so we would spend time days poring over the same records, making sure they reconcile, making sure the VAT had been claimed properly. And those skills, those fundamental skills that were drummed into us over months and months, now trainees come in and on day one, they're preparing full sets of accounts because the client has done the majority of the work through the software available to them.
Yeah.
And so we're already seeing that we need to look at the way we train people, the way we explain what we do, maybe accelerate some of the more structured learning they do so that it actually fits with the journey they're on as apprentices. In terms of the rest of what we do, again, less compliance and more advisory is the way it needs to be, because the software does the work, or the client is doing the work, and you don't need to be trained as an accountant, because what you need is to be trained to work software. And so the need's still there. Our industry is not dying; it is evolving, and it's only accountants that understand that they need to be advisory. They can't sit behind a spreadsheet and crunch numbers anymore.
And I'd love to see accountants. I've mentioned this to many accountants that I've met over the last 4 or 5 years, that if you're an accountant and a business advisor, and I mean business advice in the more general sense rather than just pure financial advice, then you're providing a much more rounded service for your clients. And there's still, I feel, not enough accountants who are prepared to step up and say, and I'm also here to help you with the other aspects of business.
Absolutely. We are seeing our institute and the ACCA, the two main bodies that we train under, changing some of the emphasis of the CPD they provide, the continuous professional development.
Yep.
So very much when I became a chartered accountant, it was you passed exams, and then you called yourself an accountant and you just got on with your day job. And really, to learn how to be in business, you had to either get out there networking, or you just had to jump in the deep end and work things as you went. But we are seeing now more emphasis towards soft skills, particularly communication, mental health and that sort of thing. But also we're seeing now whole diplomas in sustainable accounting, as in being able to deal with carbon footprint and ecological issues. We're seeing other ways that our industry can develop to support the businesses of the future. So it is happening.
Evolution, as you say. So, I mean, I'm delighted that we've had the conversation, because actually when I look down my list of questions, we now know how to set ourselves up, how to pay ourselves, what kind of traps to avoid, management accounts, the role of an FD and things. So there's lots of great advice in there for business owners. So just let me say thank you very much, Toni. It's been a real pleasure to see you and to have the conversation.
No problem at all.